I just have this attitude of nothing can stop me. What I've learned to do over the years, and it's still a journey for me, is to always conquer myself first in the morning before I conquer the day. Meaning
Mhm.
like the ritual of meditating, reading, yoga, exercise, all of those things to add value to myself before I open my cell phone and get out to the world.
Hey, good morning, everybody, and welcome back. It is Saturday morning, and this is Multifamily Unplugged. Hey, buckle up for this morning. I'm super stoked about the show. We have a operator on Capital Fund group that is really tearing it up, and I think you're going to learn a lot this morning. Hey, one thing I always like to do in the morning is, remind you to think about something in your life that maybe you're intentional about. But, I had somebody on my show this past week that, I asked that one question all the time: what's the one word that best describes you? And the word that this individual said over the last few days was persistent. And, that has really stuck with me this week. It's our persistence in what we continue to do that causes us to be successful. You could be persistent at not doing anything and you're not going to get anywhere, or you could be persistent at continuing to do those small tasks every day, those mundane things that cause your business to grow. So, if you're new in the multifamily business, you're definitely in the right place this morning. We're going to learn how to scale this business. And, it's persistence that keeps you growing your business, keeps you scaling your business. But my guest this morning is Fuquan Bilal. He is from New Jersey, calling in from New Jersey this morning. He's with NNG Capital Fund. And let me bring him in real quick here.
How are you?
I'm good. How are you?
Good, good. Top of the morning.
Good to see you. Yes, it is top of the morning. That's for sure. I always love these podcasts, on Saturday morning because, I think that people when they listen in, they're a little bit more relaxed. The week is over. It might have a little bit less stress behind them, and maybe just spending some time with the family or getting caught up. So I think it makes bigger impact in people's lives when we can talk kind of off schedule, right?
Correct. This is true. More attentive, right? People tend to be more attentive.
Well, we hope so, right? I mean, my girlfriend always tells me that I'm not there, So that's something I'm always working on is my attention span. So, hey, I think that happens when we have so much going on in our lives, and being a visionary and an A-type personality, it's sometimes gets hard to focus on one thing. It takes a lot of work. So, hey, I appreciate you being here with me this morning. I always love interviewing people, especially when I get to meet them for the first time. But, one question I always ask my guests before I start the show is, in one word, what best describes you personally and professionally?
Driven.
Driven.
Yes, driven.
And why do you say driven?
I just have this attitude of nothing can stop me, right? So I guess it's from my background and where I come from. And, just to go back, what you were saying about we were talking about attention span and everything else. What I've learned to do over the years, and it's still a journey for me, is to always conquer myself first in the morning before I conquer the day. Meaning
Mhm.
like the ritual of meditating, reading, yoga, exercise, all of those things to add value to myself before I open my cell phone and get out to the world where the busyness and, I'm about to get crushed by everything that's happening to the day. I like to conquer myself before I start the day, but staying driven and obsessed on things that are in front of you, even when there's nothing in front of you, just because that for me, that has make me grow constantly to um, the newer version of me, right? Because sometimes we get to a place in life where we make money, because we thought that was the goal, to make all this money, to have this certain amount of monthly cash flow. Then we get there and go, okay, I thought this would be it, but now we're chasing, right? And then a black swan event happened, and now we're in the valley again, and we chasing to get to the peak again, and it's never ending. So what I've learned is the real wealth is within, and those rituals that I do in the morning, it keeps my mind set, so I can become that warrior and try to conquer the day. So driven is the thing that comes to mind when you ask that question.
I love that. And I like your explanation around it, right? And I think morning routine is so important for us. Who's the serviceman that talks about making your bed first thing in the morning?
Which about Goggins?
Yeah, Goggins is one of them.
No, someone else. His face is in my mind, but I don't know. Stocky, bald head guy.
Yeah, I can't think of his name either. But
he said, if you don't make your bed, you already failed.
Right, exactly. I think I've
told my kids that, but that doesn't seem to work.
For some reason, my mom used to always think if I didn't make my bed, I failed. So I learned at an early age, make your bed, but you're right. You conquer the day from that morning routine. And like you, I do the same thing. I get up, I meditate, I pray, I go work out. I come back and get my head centered, and I think you have to do that.
Yeah, because you can't, right? You have to get that. I guess I call it equanimity, right? The balance within, to be able to go and be ready to take on all of the challenge and drama that's going to come to you as soon as you step out of the door. Like, I would just tell myself, today is going to be chaos, it's going to be drama, it's going to be whatever. Not to put it out there, but so when it happened, the emotions doesn't trigger me because I already expected it, sort of, right?
So something you mentioned, you said, some of it comes from your background. So why don't you talk a little bit about your history and where you're at today and how you got to where you're at, and loop in why you made that comment about your background.
Yeah, I mean, I guess it's similar to anyone who have a story of growing up in a rough neighborhood or background, no financial literacy, single parent household, welfare, all of those things. Growing up from that, it kind of makes you hungry. I always joke and say there were plenty of candlelight dinners and they were not romantic because the power was off because my mom couldn't pay the electrical bill. So having that mentality that I don't want to be like this when I get older, I started to become hungry and figure out at a young age, what can I do to make a better living for myself? And I gravitated towards sales. And through the years, coming through corporate and everything else, finally, I was able to get a taste of a real estate transaction, and I never looked back from there. And I figured if I can put all the time and energy into this real estate business, the same efforts and energy I was putting into corporate and working 80 hours a week, if I put that invested into myself, I know I would be successful because I was always hungry and driven. And I became obsessed with whatever was in front of me. So me having that at an early age and then getting into real estate around 99, before the GFC, it kind of gave me the opportunity to understand. So that's why I mentioned my background. It's like almost something that I look at as a motivation. Like, I'm grateful that I was brought up that way because I look at a lot of us, that built a successful business and then have kids, and the kids have it easier and don't have the same background we have or upcoming we have. They're not as hungry as we are. So they live a different life, right? So, and we wonder, why they're not hungry? Why they're not doing this and doing that? Because we gave them everything, right? We wanted them to live a better life than us. So we forgot we are who we are because of the hunger and the desire we had to win because of what we didn't have. At least that's my story,
Yeah, I get it. That's for sure. So, tell us a little bit about NNG Capital Fund.
Yeah, so NNG is a private real estate company. what we specialize in is alternative assets. We have two verticals currently, which are the luxury spec homes in New Jersey, around about 25, 30 minutes away from the city. We invest in 5 counties, and we will buy a house, add an addition, or pop the roof, or tear it down, build it new. The largest we'll build is anywhere between 3,500 to 5,500 square feet, with the sell price of anywhere from 1.5 to $2.5 million. So that's kind of what we do in the Northeast. I started off flipping in '99, got a lot of great resources. At first, I did it in the low income areas from where I come from, because that gave me my fill of importance, going back and eliminating the blighted properties, the dilapidated properties, and putting the properties back on the tax roll, giving the residents a better place to live. And we did a lot of rentals that way, 2 units, 3 units, 4 units. And we built a nice portfolio, and we did that for a long time. Then the GFC happened, and then COVID happened. And, during COVID, because New Jersey is a blue state, we had a lot of residents saying, oh, I can't pay rent, COVID. So what I quickly realized, I always say this saying, as the economist John Burns, he said, after COVID, it was like a dead cat bounce. The market just came back, and pricing was 30% of a list. So I took that opportunity to liquidate those assets, take that money, and start investing in larger multifamily properties in the Southeast. But I still kept the flip strategy here, but transitioned from the low income area to the higher areas where it was more profitable. I was raising money. So at the time at the COVID, I was raising a lot of money. So I was able now to buy these houses cash instead of getting lenders for them. And that's how I was able to get into the luxury space, by doing that. And then the capital that we made from selling the rentals we had here, we just started to deploy that and invest it in the Southeast, where we can do a bigger impact for low income. And our goal there is to provide quality, affordable housing. Typically, for anything that we buy would be 76 to maybe a 95 build. So C plus B areas, something like that. And we provide housing for low income families.
So I have two quick questions, and the first one is probably the easiest. But do you do LIHTC deals, low income tax credit deals?
We would buy those when they're almost fully seasoned, because we don't like to have the deed restrictions unless we're going in and it makes sense to do that. If we're getting funding from a affordable fund that requires you to have that LIHTC, so it checks the box on their affordable thing that they have to lend for, because they have a certain amount of funds they have to allocate. But we purchased some that had maybe 1 year left of deed restriction, but we have not yet purchased LIHTC deals. So, but we do, in some situations, if we have a fund that want to give us lending at favorable terms, we will restrict probably 50% of the deeds at the property, which, I mean, the reality is affordable housing is comparable to HUD rates. So yeah. It's pretty much the same of what we're charging. Market rent that we have on our properties and our system is based off of what HUD is paying. So, it's still affordable.
Got it. Interesting. And what is that luxury market? And, is that an upper luxury market at $1.5 to $2.5 million where you are, or is the house prices still even higher than that?
Well, medium home price is $650 in the area where I'm at. Right. Wow. So you can't either. I mean, I'm going to look at a property later on today at 3:30. It's 99999. The reason it's not $1 million, because they just passed a new mansion tax to the seller, 1% at $1 million, 2% at $2 million, 3% at $3 million. The seller pays that. So it's being sold under $1 million. But I mean, to get a deal, it usually looks like we're going to pay $700,000 for the property. We're going to do another $200,000-300,000 into it. Maybe we'll pop the roof. If we have to put an addition, it may cost us $500,000 to really gut the house out, rebuild it. But that would be something that would trade at 2.2 or something like that, right? So we just look at it case by case, because that's doing those type of builds. The cash conversion cycle is a little bit slower because it takes 12 to 18 months sometimes if you have to get a variance or whatever the case is. But the profits are really big. So To answer your question, the luxury question is there's houses like in Alpine, New Jersey that sell for $10 million, $30 million. So where we see the sweet spot is 1.5 to $2.5 million, where things are still going into contract within 90 days and closing in less than 6 months. The latest one I sold was 2.2 million. It was on the market for 47 days before it went into contract. Just to give you an idea of what it looks like in our market, because for New Yorkers, that's not a lot of money. That's a 2-bedroom apartment for them. $1.5 million. So
Yeah, that's interesting that that market is as robust as it is. So, how many of those are you doing on an annual basis?
we try to do 10 to 12 a year, somewhere around there.
Wow, in that price point, good for you. That's awesome. That's awesome. It starts to make me wonder if there's that kind of a market out there in other markets.
I'm sure they are. I mean, you have the people who have money. They're not downsizing. They have status, so they have to, from the country club to the house, they need to have the $2-3 million house. So you have different types of people who's in a different tax bracket. So there are still people buying houses in those areas.
And are those custom builds, or are they semi-custom, or are you just speccing them?
They're spec. I mean, I build them and we leave all the walls white. We do nice fixtures in the house, so it's pretty much move-in ready. I don't really like, me personally, building custom because it's aggravating, in my opinion.
Yeah.
I'm not a custom builder. I'm not sure if I would have the patience for the change orders, the constant changes. I don't. I've tried it before. I've tried it twice, and it didn't work because it was too many changes, which slowed that project down. The only benefit I see from that is the funding that you get from the borrower, because you're utilizing their money and basically you're working on their schedule, but then you become a contractor.
Right.
We do manage our own construction, but we build it, we spec build. So we build it to our finishes, and so far so good. We haven't had anybody come in and make any gripes. I mean, sometimes I'll do like a blue cabinets in the kitchen where people can't see that far, and they go, "Oh, we just wanted white cabinets." But then 2 months later, they're grateful for the blue cabinets because they discovered it's in now, right?
Yeah, right.
When an owl in one color and the cabinet's another color. Most people, when they're spending that type of money, what I've learned is they like to design their own home.
Yeah.
Somebody spending $2 million from the house, they want some sort of say so, and if it's still under construction.
Yeah.
So I try not to even say coming soon until we're done, right? Because as soon as you start doing that, then they come in and, oh, we want to pick this type of tile, we want this type of vanity, which is okay, but that slows down my process of construction.
And is your build specs pretty much always the same? Are you using the same, kitchen cabinets and granite and tile, and or are you changing it up every house?
Some things we do. It's pretty much cookie cutter. Like, we use the same appliances, the same flooring, the same door locks, knobs, same tile, but we'll switch it up depending on the house layout, the size of the powder room. We'll switch it up. Vanities, we always switch up vanities. We don't put the same vanities. Toilets, we put the same toilets. So the things we can repeat, we will do. But some things we like to make it unique, so it kind of fits to that house. So,
Got it. So the other thing you talked about was that you raise capital for your deals, whether it's multifamily or the luxury market. Talk a little bit about raising capital today in today's environment, what that's been like for you, and maybe some strategies around how you go about doing that.
Yeah, so raising capital, what I've learned is it's a whole nother business, as I'm sure you are aware, because it's a people business, it's a lifestyle business. Putting yourself in environments where the ultra wealthy is at, or high net worth individuals are, establishing those relationships and really not expecting to raise money immediately, just really educating them on what you do, right? And hopefully you'll get some contact information and create that relationship where you can continue to educate that person on what you do. And what I've learned is once people know, like, and trust you, then they will essentially invest with you. Then from that point, when they invest with you, communication is everything. Good, bad, or ugly, you have to continue to communicate with them. Most people don't do that. They do a lot of the communication and everything up front. Then when they get the money, it's just, okay, I'm going to send them their monthly or quarterly payment. I'm going to send them a statement, maybe do a webinar twice a year just to give them an update. And the mistake that they realize is that you need to keep that communication because ultimately you're creating a lifetime relationship.
Right.
And you're standing apart from different sponsors that's not doing what you're doing, that's not doing education. Sometimes people come in through referral and they may not know all of what you do, but a friend of theirs or a family member may have been raving about you for years and nothing ever went wrong. So they feel comfortable and they just send you money. But they need to be educated also. So
Yeah.
you have to try your best as someone who's raising capital to look at it as a relationship business, education, to kind of take down fear and also ignorance that people may not know, right? How you underwrite deals, how you evaluate them, constantly just purely doing education. You can set it up on demand. Like you can just record things and have it, they can watch at their leisure. And the more educated they are, the more confident they are.
Yeah.
And in this market, to answer the other part of the question, it's tough because of what's happening, right? People are looking at things on a macro level instead of a micro level, right? They're saying, oh, the news is saying real estate is down or interest rates is high and people are waiting to buy. It's not a good time. But every market is different. Like right now in Florida, where the market is not so well, it's like a deceleration, values are dropping, people are pulling their houses off the market because they don't want to lose money on selling them and they just waiting it out. North Jersey is a different space, right? We still have some traction happening. West Coast is different. You have to learn how to investigate what's happening in that local area because not everything is the same. And if that's where the education coming at, right? If you can explain to your potential investors or your investors what's happening in your market with the market update monthly, quarterly, whatever, versus other markets, you stand out as the one who really are very established in your area, and they kind of look at you as the person, go-to person.
Yeah. That's interesting. Real estate's a local market, right? And every market you have to look at differently through a different lens and know what's happening in that market. That's why I think that those, when you look at the market, and I've become over the years, I've become a market driven investor. And you could bring me a great deal in a bad market, and I'd say no. But you could bring me a questionable deal in a great market, and I'd be more excited about looking at that opportunity. So it has really become more and more of a localized business. You mentioned something really interesting about hanging out where the wealthy, the ultra wealthy are. Give some examples around that. What types of events are you going to? Where are you hanging out?
Those could be yacht clubs, events where they have fundraisers at, things like that, Rotary clubs. There's Facebook groups you could join, people who buy luxury watches or cars or whatever. And you put yourself in those environments. There's also masterminds that you can attend, right? So there's like CEO masterminds where you have people who own businesses who's looking to grow their business, right? Maybe they're doing 5 million a year in revenue and they want to grow it to 10 to 20 million a year. So they subscribe to these groups, and you are a business owner, you can become part of that group. And now you're sharing information about your company, education. They're getting to look under the hood. And at the same time, you're developing a relationship with them. And that can turn into a potential investor there, right? Those are business owners who may have 10, 15, 20 employees. They're doing 5 million a year plus. They qualify as an accredited investor. So putting yourself in areas like that and creating those relationships over time, people get to know, like, and trust you, and eventually, may do a deal with you.
Hey, let's talk about process around that for a minute. Um, I'm gonna, I want to. So let's say you and I meet at an event for the first time and we have a great conversation. Um, what do you do next after you walk away from that event, away from that conversation with me?
Well, during the conversation, eventually, in a conversation will start up, what do you do, this and that, and then, do you invest in anything? If I mentioned to you that I invest in alternative assets, and then I would want to figure out like what type of returns are you making in your portfolio? Because you may be someone that's happy with 6%. You might be making six. So I'm not going to come out and go, oh, we're paying 12, we're paying 10. So when I go to events and I have those conversations and we may exchange contact information, I'll keep track of what your portfolio is currently earning, because people typically share that when we're talking about investments, whether it's stocks, bonds, or whatever you're doing. And then I'll basically, if maybe invite you to lunch and just to continue that relationship, right? Because it's all relationship based. Maybe you may give me contact information, and then that's when the education process starts. And then it's just a nurturing process, right? Educating you on who we are, what we do. What I learned is people usually have to consume about maybe 6 to 7 hours of content. It's like a song on the radio, right? At first you hear it, you don't pay attention to it, then it plays over and over again, and a month later you're singing it. So the same concept, right? Creating omnipresence everywhere all the time. So you may see me at an event, you may see me on social media, you may be getting emails from you, and all of that from me, and all of that is education. And eventually you'll know who I am. So when we meet again at the next event, now you're more familiar with me, right? So, and that's how that relationship builds. And if you're interested, you may ask questions, and the relationship will go from there. And I've seen that sometimes take 6 months. I've seen that sometimes take 3 years. Well, the person before they would invest with me, right? People are very cautious, especially these days. And there's a lot of great marketers online, people who know how to go to Canva and mark up some stuff done and get a website, and they're the best guru on social media, and it's all lies. So, you really have to learn how to vet people and do due diligence on people, because ultimately what you're investing in is in them, right? The deal may be great, but you're investing in that person, because a great deal can go bad if it's not managed properly. So now it depends on what that person is going to do. The person who's driving the bus, what are they going to do? Are they going to communicate? Are they going to try to make it right? Or are they going to run? Right. So you're investing into that person.
Yeah. Boy, that's brilliant. It's absolutely brilliant. And I just, you never know when somebody's going to invest. I heard Grant Cardone tell a story one day where he said, listen, I had a guy in my database and I knew he had money to invest, but he just would never invest with me. And he said 20 years later, the guy invested $2 million in one of his projects. And he goes, it was well worth staying in touch with that guy and having him say no to me for 20 years, because when he did invest, he invested $2 million. So, you never know where that next investor is going to come from. And I think it's a belly to belly business, just like you're talking about. You've got to be out there meeting people, continuing to build that relationship, dating them, staying in front of them, educating them. I think you hit all of the key points along the way. Other than calling me from time to time on the phone, do you have other systems that you have in place to touch those investors or potential investors along the way? And what are you telling them if you are touching them?
Yeah. So a lot of people consume social media. So digital marketing, if you are trying to raise capital, is really good nowadays. People scroll all day. They may consume your content on YouTube or Facebook or whatever. They may receive a text message from you on a webinar that you're doing. It could be an on-demand webinar that you pre-record, that you may can send a text to them on a Saturday morning. Hey, watch this 20-minute webinar, something nice, short, talk about, the project, and their frequently asked questions around that. And then just emails with call to actions to set up a call to learn more about your investment journey. And it's more of fishing instead of hunting. Like, I don't like to constantly call people, right? Because if someone's interested, they're going to call you, right? So it's more like fishing instead of hunting. So you're educating, you're putting the information in front of them, you're sharing your content. People are seeing you at projects, and eventually, if someone is interested, they're going to pick up the phone and call you, right?
Yeah.
I remember, I mean, there's probably still people dialing for dollars. There's probably still people calling and, hey, we got this great deal. What do you want to do? It's almost like I feel like it's intrusive to do that sometimes. You know, maybe you might send a text message, hey, let me know if you want to jump on a quick call. Some people will. People are busy, but if they're interested and you get their attention, which is the most valuable thing is attention, they will come looking for you if they are interested.
Yeah, absolutely. I agree. I couldn't agree more. It's interesting. I want to just circle back for a minute and talk about what you were talking about, the news media and what the news says about interest rates and about the market and where we're at in the market. And, when CNN and the news channels start to say that the market has changed and the market's getting better and there's more houses on the market and there's more sales happening and interest rates are down, generally when that happens, it's late. You're late to the party. And I want to encourage people today, especially the passive investor that's been sitting on the sidelines saying, hey, I'm waiting for interest rates to come down, or I'm not going to invest, or I'm not going to buy that house, or buy that investment until interest rates come down or the market changes. Well, I firmly believe in, and tell me if you disagree with this statement, but I firmly believe we're at the bottom of this cycle, and we're going to cycle out now. When you start to look at some of the fundamentals, where the GDP is today, where inflation's at, where unemployment is at, the fundamentals, the underlying fundamentals are telling us that we're strengthening. And as we strengthen, by the time the media catches up with us, we're going to already be in the flow of that up market. And really now is the time for investors to invest.
It's always a time. A mentor of mine told me before, and I didn't get it at first. He said, always buy as much as you can buy, just buy.
Mm,
Everything is based on terms. Everything is
right.
based on terms. If you get good terms, favorable terms, whether it's owner financing, whatever it is, the way you structure the deal is what matters. But
Yeah.
never sit on the sideline, because there's always deals out there that you can set up favorable terms where it will work out, right? So people, if it's not a fix and flip market, prices are too high, those could be rentals.
Right.
Those could be subject twos. Those can be innovation. It could be whatever strategy from your acquisition point that you can turn it into to make it a profitable deal now or later. But sitting on the sideline waiting, it's not the game plan.
Yeah, 100%. Hey, I appreciate you being here this morning. I think we're going to get ready to land the plane. Why don't you tell people what you're working on, what you could use some help with, and how they could get a hold of you?
For sure. What we're working on the multifamily side is operational efficiency now on our portfolio in the Southeast. And here in New Jersey, we just closed one of our biggest ground up deals, made close to $1 million profit, within 12 months. So that's exciting. We have another one in the hopper that's coming up on the market fourth quarter that we're gunning for. So we're excited about that. What we need help with is more deals.
Yeah.
If you are local in New Jersey and you see this and you're in the Northern Jersey area, send me some deals. We buy, we close fast. And that's about it. You can reach me on social media at Fuquan Bilal on Facebook or LinkedIn or Instagram. You can also go to my website if you're interested in partnering with us on deals at NNGCapitalFund.com. That's NNGCapitalFund.com and set up a discovery call.
Awesome. Hey, Fuquan, I appreciate you. I appreciate you being here this morning, taking time out of your busy schedule. Hey, I'm going to move you to the back room. I'm going to say goodbye. If you hang out with me for a minute, I'd appreciate it.
Sure, no problem.
All right. Thank you. Have a great day.
So,
Hey, everybody. That was a great episode. Listen, I would rewind everything we just talked about. And especially if you're a capital raiser and you're looking to raise capital, boy, there was some golden nuggets in there for sure. And Fuquan definitely had some great thoughts and some great ideas about how to raise capital and where to hang out, where to spend your time, and how to follow up and talk to people. So go back and listen to some of this. I appreciate you being here. We're here every Saturday morning. We're always bringing you a great guest, somebody that's going to be able to help you learn something new, implement something new, maybe push you a little bit further in your business to go out and do great things, scale your business, raise more capital, do what you need to do as an operator, as an owner. Appreciate you being here. Listen, if you like what you heard this morning, please like us, love us on social media, subscribe to our YouTube channel. There is tons of content there, tons of information for you to grow and learn from. Also, remember, coming up October 16th and 17th, our 6th annual virtual multifamily summit. 20 speakers and panelists this year, back to back, all day for 2 days. You're not going to want to miss this year's event. We just launched our early bird special, so get your tickets. They're selling out quick, and this session's filling up fast. So this is an event blocked 2 days out of your schedule. 20 people are going to pour into you, give you the gift of their knowledge, their education, their ups, their downs, just to help you grow a little bit more. And I'll tell you, we're coming out of this market cycle where this education can be beneficial for you. Thanks for being here. Blessings to everybody, and we'll look forward to seeing you next week.